With several investment platforms to choose from, it can be overwhelming at times to decide which platform to start investing with. So today I'm going to be going over which types of questions you may want to ask yourselves to make the decision easier in choosing your ideal investment platform. So for those who have followed along and have watched my previous videos, I use the Trading 212 platform to invest as a dividend-based investor. And before I get into the main part of this topic, I just want to provide you with a quick update. So the portfolio is very strong at the moment in terms of the capital gains. We have a portfolio value of close to £9,100, and because I have some free funds available, we have an account value of slightly over 9,400. Now, when I first started my journey into investing, I used a whole range of different platforms, and it took me a while to decide on using the Trading 212 for my style of investment. But I appreciate that not everyone is into just dividend-based investments. So the first question you want to ask yourself is, what type of investor are you? Now, there's a whole range of different investment strategies. For myself, as I said, I focus on dividend-based companies, but if you wanted to, you could be a swing trader, which is much more of an active process when buying and selling stocks. And then you can be on the other end of the spectrum where you just buy a stock and you hold it for the long term. So that is more synonymous to that of a long-term investor. Now, there's other types of ways that you can invest as well, so definitely research and try to answer which type of investor you wish to be. And do keep in mind that if you like to have two different styles of investments, then that is definitely achievable, but you need to make sure that you have a separation. So it's not a good idea to have a mixture of stocks and shares that you decide to buy and sell quickly within the same portfolio to shares that you hold for the long term. It becomes very confusing, and mixing those two processes are generally a bad idea. So instead, what you can do, and actually to a certain degree I do this, so on my platform for Trading 212, I have the ISA account, but I also have an invest account, and from time to time I have brought stocks that don't pay dividends, and we can see that from the list here. For instance, Slack. We've got other companies out here as well that do not pay any dividends. So that is one way of having that logical separation, and that's all driven from the same account, but just has a complete separation between the two. And equally, you could have one investment strategy within one platform and a completely different investment strategy held in another platform. So one of the questions I had to ask myself at an early time was that I was aware that I wanted to be actively invested, but I wasn't too sure how active I wanted to be involved in the process. So earlier we spoke about a swing trader, which is a very active process. You need to make sure you're awake when the market opens, not so much during market hours from sort of lunchtime onwards, but definitely before the closing bell. Now for me, I didn't want to be really active when buying and selling, and that's why I chose to hold for the long term. But in terms of how active you are, that can range from, if you plan on picking individual stocks, that is much more of a process because you have to analyze which stocks you plan to buy and hold for the long term. Now, you can lower that form of activity by choosing just ETFs, which provide you with exposure to a range of industries, but they minimize your risk. At the same time, the reward is much less, and there are some fees associated depending on the type of ETF you purchase. And equally, you may want to not even have to decide which ETF to pick. There's a lot of choices out there. There's quite a bit of groundwork when deciding the type of ETF, so you can decide to have a fully managed portfolio. And these types of accounts, they have ongoing costs, but you are completely hands-free from any of the decision-making aspects of investing. Now, within Europe, we've had a growing number of platforms that inherently have a certain type of investor in mind. So when you've been able to answer what type of investor and how active you want to be invested in, you can then start to pick the type of investment platform to make your life much easier. As the years have gone on, there are more choices available, and the types of platforms available will continue to grow. So I've spoken about some of these platforms in the past, and I'm just going to touch on them briefly. So of course we have the Trading 212 platform. If I'm honest, the initial investor was not for that of a dividend-based one. And I say that because some of the features that we're going to see in the future are definitely going to help the likes of dividend-based investors, but up until now, it's been somewhat of an afterthought. But nonetheless, the likes of Trading 212 has been great to buy individual stocks. And so someone that just wants to purchase their own stocks, this is a fantastic platform. And in addition, we have all the graphs within the app, and for the most part, I can just analyze if I wish to. And similarly, we have free trade. Now, for the most part, the type of investor that is interested in using this platform is someone, again, who wants to buy and sell stocks and shares. For now, it's app only, so they don't have a desktop version. But for most individuals, they know which stocks they want to buy, and they can purchase them very quickly on their phone. So there's a lot of comparisons, Trading 212 versus free trade, which one should I pick? A general sense, you're free to pick either because they attract the same type of investor. So those are the top two trading platforms that we have in the UK from my perspective, and they help individuals buy in stocks and shares. But let's just say you are an investor that wants to have a bit less of an active approach in their investment choices. So Etoro is really good because you can follow or copy other traders. And so if you're comfortable in someone else deciding when to enter and exit trades, then I can't think of another platform better than Etoro. Now, in terms of buying individual stocks or certain types of ETFs, you're able to do all of that as well. But for me, I see Etoro as a great social type of platform where you can have other investors to trade on your behalf. Now, I do want to warn that you have to really do your research. I've copied investors that have pretty much lost money. So you definitely want to spend a lot of time analyzing the type of investor should you wish to copy their trades. But the main benefit that I see of Etoro is that it allows you to have more of a hands-off approach with the day-to-day investment decisions. Now, Vanguard is another popular investment platform. They are all Vanguard specific, so they have ETFs, they have a lot of index funds, and you're free to pick anyone that you want to invest with in the long term. So there are ongoing fees, but they're extremely low. So if you just want to have money deposited every month and then reap the rewards in the long run, then Vanguard is a really simple way. It's fully automated. They have a dividend reinvestment plan as well, so any types of dividends that you receive can go back into your portfolio to further increase the gains. And by no means is this the only platform out there, but it's the last one that I'm going to be focusing on, and it's that of Nutmeg. So Nutmeg is a robo-advisor, which just means that they use digital financial advice in the form of mathematical models or algorithms, but equally they do have a human aspect as well, which can range from moderate to minimal human intervention. So if you deposit money into the account, you'll be selected with a range of ETFs, government bonds, and international investments, and you'll continue to buy from those markets. Equally, if you wish to have more of an actively managed process, then you can pay more in terms of the payment every year, and someone will manually sell out of positions when they're not performing too well. So Nutmeg is in a class of its own. It does enable you to have a hands-free approach. As for Nutmeg and my personal experience, the gains have not been as big compared to the other platforms that I've invested in. Now, that's not to say that that will be beneficial for everyone else. The main benefit I see in Nutmeg is that it's a fully hands-off approach, but you are paying a little bit more of a premium just to not actively manage any of your personal funds. So as a recap, you want to select a platform that aligns with your investment goals, and you also want to select a platform that makes it easier for you to invest in a style that you wish to choose. And remember that you don't have to invest in just one. There is, of course, a limitation in opening a new ISA account on different platforms. You can only do that once a year, and you're not allowed to continually pay into any of the open ones for a given tax year. So there's limitations there, but you are completely free to have different investment styles across different platforms or on the same platform, but just keep that logical separation, as I mentioned earlier in the video. So my question for this week is, what type of investor do you see yourself as? And from the types of platforms that I've mentioned or others that I haven't mentioned, which one would you pick to suit your needs? So feel free to leave a comment in the section below. I'm interested in hearing your thoughts. And with that said, I'll catch you in the next one.